Happy Feds Day, Wednesday. Coming to you a little early this week, so you can get rid of me a little earlier this week. Your humble CIO, Jonathan Camarda, with Jay Powell's unrolling of some pretty positive news. Well, we already knew it was going to be 50 basis points, right? Next couple of meetings, in fact, he telegraphed it like slow pitch softball. However, if you listen closely, and if you're not a wonk like me, perhaps you weren't doing other stuff, right? I'm envious. He ruled out the 75 basis point hike that we've heard from some of these other folks, especially our buddy Bullard. You've heard hawks like Fisher and Brainerd came out of left field. There's going to be some balance sheet revisions to her credit. However, the market has probably overshot, right? Like some of our bad golf shots at the green. Overshot potentially, creating maybe, potentially, I use that word already, a tradable bottom here. Too soon to tell. The last three Fed meetings, the markets reacted positively, but as you know, a week later, things can turn and script can flip. However, right now there is some positivity with that certainty and that he ruled out some of those outliers. So what does that mean? Well, right now, as we drill down, we like large cap value. We like growth a little better than we did. Still don't like small caps too much, but we do like mid caps better than small cap brethren there. We do like some developed foreign markets. It's been a while there, as you've seen some participation, some of you folks this morning, as the strong dollar, which we've been participating in, is not hurting their exports, and so that we continue to watch attractive possibilities there, even with the Eastern Bloc, which if you saw Jamie Dimon this morning, could continue for a while. Now, we still like energies and materials, especially energy. You may have seen an infusion there as well this morning, because as China wakes from their lockdown slumber, right, we're still waiting, but when that happens, again, this is going to add more momentum, and the supply-demand situation continues to be attractive for the commodity markets, which you've continued to participate in as well. Now, GDP-wise, we saw the negative print last week. However, job market looks good. It's tight. Consumer sentiment, on the other hand, is negative, mostly the inflation and the cost headwinds. You look at CPI, and for a lot of folks, the food and energy is a high percentage of what they're bringing in, so there is pain out there for sure there. Easy for me to say. That's what happens when you get off the prompter. $5 charge. Now, next, as we look at, we're looking at sectors. We do, again, like some of the technologies now as they've been oversold, semiconductors and the such. So our AMD's earnings looked really attractive yesterday. We shall see if that is a domino effect. Again, I will keep this brief, except to say that there is some certainty. The letters UN in front of that word are not good for the market, but once you remove them, the market, like a horse ready to take off, we could potentially see a reversal of what we usually see. Strong April, weak May. This could be a strong May after a weak April. Now, you may have seen we recalibrated and cleaned the tables off and reset to certain sectors as we were looking at and eyeing this up before the Fed meeting, as you may have seen in your strategies, but still remain hedged on a liquidity basis because these are binary events. If Jay even mentioned possibility of a 75 basis point hike, then we could see more red on the screen right now than during a late October B movie. Off the prompter again, I apologize. Break out the newspaper. No pun intended, right? So anyway, that's all I have for this week. You got rid of me early this week. What's better than that? Market's up and you're done with Johnny. Listen, I hope you guys are doing well out there. Let's enjoy again the quality positions that we're in. We'll continue to look at the prudence with eternal vigilance on further participation in attractive sectors in this market, but not being over giddy as we've had this whiplash routine before. The washing machine still is in effect, my friend. It is a whirlpool year, but perhaps we might get a little fluff and fold. Appreciate your time, your patience, most importantly, your trust. Jonathan Camarda signing off, and I'm sure you're thinking that a moment too soon. Till next time.